So really, Store Space was an offshoot of our prior company. And so both Rob Consalvo and I were former members of the executive team and partners of iStorage. We sold that company to NSA. It was a really big transaction. It was a great deal for everybody. At that point in time, we took a little time off. Fast forward to 2018, that was when we actually started the business back up again. Saw some opportunities for great acquisitions and kind of got the band back together. Assembled a great team, started building out our technology and acquiring, and a little over 2 years later, and about 35 locations owned and continuing to grow third-party management. So a third-party management company, it essentially takes your self-storage investment and turns it into more of like a mailbox money type of deal, where all of the headaches, all of the challenges, all of the expertise that is necessary in order to self-manage that asset, that burden is taken off of the owner. And they get to coordinate with us on leveraging our team, our technology, our platform in order to ensure their store hits its performance. So the cost on it all depends on what kind of system you want to run and how you want to operate it. But essentially, most third-party managers, they all kind of end up in the same basic place. You're anywhere from 4 to 6% of collected revenues and management fees. There's usually some level of call center fee, anywhere from $250 to $500. There's additional technology and platform fees, which may run you $500 a store per month. And then there's split on tenant insurance or tenant warranty. Some operators take 100% of that, others take 60%, 50%. And so we tend to fall in the 50% range for tenant insurance proceeds, call center platform fee, roughly $1,000 a month, and then 5% of collected revenue. Yeah, so signage and branding, let's spend a little time talking about that. The benefits to having a larger platform and scale is that we have a whole team of people who have spent years building out the search and strength of the organic platform within our brand and our website. And so if you try to start off with an independent brand or a third party that has no history and no time period, you're kind of fighting an uphill battle in order to have your marketing costs be efficient. We prefer to have people branded onto our Store Space brand because you get the benefits of all the technology, the systems, and the hard work that women like Jane have done for us in order to ensure that our website is optimized and that we're generating the lowest cost leads we possibly can. As part of the cost for branding, there's two ways we look at it. If you would like us to spend money to rebrand it, we're willing to do that, but then that changes the terms of the contract a little bit, where we have to make sure we can recoup those costs if we're expending significant dollars up front. So there's going to be some sort of penalty for early cancellations just to protect us from financial loss. If somebody else is willing to, or if the owner is willing to put those investment dollars into the branding, then it makes it much more flexible. If you don't like what I'm doing, early cancellation, no problem. So it covers everything from social media. You can't have two different brands running the same social media campaigns. You have to maintain and focus on your specific brand, your messaging, what you want your brand to stand for. Trying to run multiple social campaigns just gets really inefficient. So that's usually why we recommend people stick with the brands, what has the established track record and the messaging, because it gets more efficient for any of your paid campaigns that you're doing, whether that's through Google or whether that's through, testing some channels in Facebook. It's important for social media to maintain a cohesive brand. First and foremost, the team behind this, we have done what a lot of these private operators want to do. We've built companies from scratch. We've stabilized and seasoned assets, and then we've taken it full circle and actually sold out of those assets and realized, great returns on our investments. And so we bring that to the table as private operators. And the other area where we've been able to compete is we have an entire proprietary system that we've built and we've designed to enable operators, people who don't run 1,000 locations, to be able to compete with the big guys. It's much more difficult to run a small platform and a small amount of stores and be efficient with it if you don't have that technology underscoring it. The other aspect of how we built it is We don't have 15 or 20 locations in a specific market to where we're buying an entire city's worth of paid campaigns and traffic, and then you're kind of picking and choosing who gets to have those leads. Our campaigns are driven around how do we maximize the volume to that specific location so that we can generate a ton of revenue and grow and hit the pro forma that the owner is looking for. In a lot of cases, when you go with a really big operator, they are fantastic at operating their facilities in scale. The problem with that is that you may have one individual store, and on the averages, they're performing extremely well. They're hitting 5% same store revenue growth or some metric similar to that. But within that, there's the stores that are outperforming and there's the stores that are underperforming. If your store happens to be underperforming, it's a lot harder to make changes to how they're either marketing, operating, pricing to where they get that individualized attention. And that's ultimately where we are trying to solve for what we see as a deficiency in the market, as we hear every day that people are unhappy with the performance of their current third-party management company. And we feel like we can bring something special to the table. Yeah, so Storage 360 is really a system that we've built based on what we've previously done and we know actually works. We've built a ton of different systems in the past and really focused our S360 platform on which systems are ultimately going to drive performance for the asset and simplify the lives of the people who are operating. Simple things like our website. Everybody's made a big news story about doing contactless rentals or touchless rentals. Our system was capable of doing that over a year ago. We understood that as technology continues to evolve and as people get more and more accustomed to having less human interaction and conducting business, you needed to have a platform that could accommodate groups like the millennials where they can come in, search, find what they wanted, pick their unit, pay for it, e-sign their lease, get their gate code, and show up to the property and never have to interact with a single person. And that's become even more important today during COVID because that's what separated us from a lot of other operators that had to quickly scramble to build out that system. We started and really maintained strong rental velocity through all of COVID, despite all the challenges that other people had because the system enabled that. And so things like how you build out that website, how we built out our call center, how the sales flow goes. That system's something we control, and we have a unified communications platform. And the idea behind that is that every phone call, every interaction that happens in one of our locations, we have all of the data underscoring that, and we can understand and make decisions based on that data. And so from the call center, we know with a specific campaign generated a certain lead, whether or not it was actually closed, what the follow-up is, and then through having that unified communications, that led into the next build out of our system, which is our accountability. It's one thing to say, I called all of my collection calls and click a button to say that I hit each one of them. It's another one to have the system automatically go in behind the scenes, look for the number that was supposed to be called, look for an outbound call that actually called that person, figure out whether they connected with them, and if we want to, listen to that call. Having all of those pieces of the process built out, that's what S360 was for us, is how do we ensure we can do this as good as the big guys and have the technology that allows us to effectively compete in advanced industry and market. Additional systems that are part of that, we have revenue management, we have our PhDs on staff that put together our pricing algorithms, and our system, I'd put it up against any others because we don't focus as much on competitor pricing, we focus more on demand. The question being, if you have 3 people who just delivered a new facility, but your project is 90% leased and you're able to still generate leases and close those leases at your previous prices, why are you dropping your rate? And that's something that a lot of people are complaining about today, is that we have a 90% full facility, we're still generating move-ins, yet we're rerunning my property has dropped our pricing by 40%. And every new rental that we're doing, we're losing incrementally more money versus what we were doing before, when we know we can generate leads in order to keep it full. So that's been a big driver on how we built out our system for our front end rates, is focusing on the demand aspect. If you can generate leases and you can fill your store, I am less concerned about what competitor pricing is. I want to figure out what's my maximum price I can generate for that rental. So we have an entire team that will help with transitioning into the technology and the use of it. And ultimately, if let's take the third-party management example, we bring in the team that implements the technology, that puts us in place, that trains the managers on how to use it. And then we oversee that all those systems and components are working. What the owner gets is they get we call an intelligence dashboard, which gives them all the data that they need to see how their facility is operating right at their fingertips. And they can go in and analyze and ask questions without having to really dive into the meat of the platform. From people who just want to use the technology, we've always taken the development philosophy as if it's not stupid simple, people are not going to use it. You have to have a system that is intuitive in order for it to have user acceptance and to have employees ultimately want to continue. Example is, on LinkedIn, and Steven Sandecki posted our kiosk and what the flow is for that. We custom built that kiosk. We've rolled it out to all of our stores. We're seeing great user acceptance of it, but it's a very simplistic flow. In 3 minutes, a person can go through the entire rental process, have their leasee signed, and be able to move in without having to. And so that's the idea underscoring the system. So that really depends on the need of the specific investor or property owner. We have had scenarios where somebody came to us panicked on a Thursday and said, company's moving out. I need to have somebody take over the self-storage business. I have no idea what I'm doing. We mobilized and we showed up on Monday the next week with temp signage, employees, people, and got the system up and running. We have the flexibility as a smaller company to meet those type of needs to where we don't have a big bureaucratic process that's going to limit our ability to move fast. The ideal timeline is somewhere between 30 to 45 days. That gives us time to analyze your store, what we expect it to do, prepare a budget, agree upon that, interview the existing managers if it's a facility that's already run by another third party, determine if we want to keep them, if we want to hire new people who are going to be more in tune with the type of system that we're running. So 30 to 45 days is ideal, but we will move as fast as is necessary to take care of clients. The biggest drawback I tell people is if you pick the wrong third-party manager, it's not going to go very well for you. And the most common issue we run into is my third-party manager has 4 other competing properties within our same submarket, some of which they own. Let's say your store needs to fill up and you have bank covenants you have to meet and satisfy. How do you know that your store is getting its fair share of the leads? And so that's always a question. Or, in some cases we've seen where, one of the stores is rarely staffed because somebody is constantly covering for a different location when it happens to be yours, doesn't have any employees there, that doesn't have the staff on site, your performance suffers. So I think picking the wrong company and understanding within that submarket how they intend to compete and how they intend to allocate your marketing dollars to fill your facility and hit your business plan or your budget is something that you really have to pay attention to. As it relates to drawbacks, let's take your example of if somebody's really attached to their staff, we can try and work with that. But the question is going to be, are they willing to adopt the new technology, the new processes, the systems that we have that ensures it can be successful? And in some cases, people aren't. If they've been doing the same thing for 20 years, they're not going to be an ideal candidate to go from a low technology solution to highly dependent technology solution. Kind of got to weigh the pros and cons of each, but the most important thing to look at is picking the right manager who's got your interest at heart in all their decisions that they're making.